This conference will now be recorded.
How to know if your client engagement is priced right. My name is William Hamilton. I'm the co-founder of SmartPath, and I'm going to be taking us through this training. So most years, tax season, January through April, is brutal. Obviously, you know that. But the thing that we really need to think about is that each year it's getting harder and harder, not easier. It's not going in the other direction. As good as technology is getting, as awesome as some of the software out there is, it's getting harder and not easier. So what happens is every time we survive it, we don't want to go through that level of chaos again. So the question we ask ourselves is, what can you adjust in your practice that will really be worth the effort because it's going to genuinely make your life easier? And the answer there is to remove the roadblocks in your client engagements. We work with a lot of firms all across the country. And if we can remove roadblocks in your client engagements, that's the ticket. That's the one thing that you can focus on that's going to make your life much, much easier. Now, why do we say that? Well, over 90% of the firms that become members have misaligned client engagements. They have a percentage of their practice where clients are paying the wrong price for the wrong services. Much of the pain that you feel as a firm owner after tax season is directly caused by clients receiving more work than they're paying for. So you rightfully feel like you're being taken advantage of. You just went through months and months of work where clients receive value from you, but you don't feel like the value that you received back was equitable. And so you feel in a lot of ways that you're being taken advantage of. And that's natural. Unfortunately, it's natural and it's normal in this industry. And then the other reason why we feel a lot of pain after tax season is because many firms don't have a methodology to make it better, or they don't even know if it can get better. And so you feel stuck, and feeling stuck gives you that feeling of pain, that feeling of dread. And so here's the key understanding. Over the last 12 years, we've analyzed pricing data for literally thousands of client scenarios, and there are objectively wrong or right prices for any client engagement. And it has nothing to do with what other firms in your area are charging. A lot of times, firm owners will just revert to, okay, what are other CPAs or what are other EAs or what are other tax professionals in my immediate area charging? Well, those firms may or may not be offering a value that's anywhere close to you. They may or may not be serving a client roster that's anywhere close to yours. So it really doesn't have anything to do with that. And the good news is you can fix your client engagements. You can fix giving the right client the right service at the right price. It is possible. And you can make that alignment happen when you correctly diagnose what's causing that disconnect. What specific aspect of your pricing is making you feel like you're being taken advantage of? And so to do that diagnosis, we want to ask yourself 4 specific questions. If you ask yourself these and identify if your price is aligned with any specific client that you're working with. The first question is the engagement focused on historical reporting or future results? And we'll talk about what that means in detail. Number 2, how much time and expertise is needed to deliver results that specific client cares about? And that's another key thing that we're going to talk about. Then the third question you want to ask is, what are your hard costs to deliver the value that this person wants to pay for? And then number 4, what should your profit margin be so that you can feel good about doing this work? So let's dive into each one of these together quickly. The first one, is the engagement focused on historical reporting or future results? Historical reporting is the least valuable service for today's modern clients. What has already happened in their financial life or in their business in the past, it's not what they care about, and it's not something that they're excited to pay for. So if a client is only paying you for historical reporting, meaning you're doing my taxes after the year is done, and you really can only affect the outcome of that tax return so much because the year has already passed, then you're just reporting on what happened. You're not helping me plan for the future. Or same thing with accounting. You're keeping my books up to date, you're doing my accounting, but we're simply just reconciling numbers that have already transpired. We're not doing any strategic planning to help improve those numbers. So if a client is only paying you for historic reporting, but then on the other hand, they're still reaching out to you during the year asking questions about the future, to help with tax planning or to help with employer HR questions or to do cash flow planning and all those kind of things, then obviously there's a misalignment in the engagement because the client wants help with getting better results in the future, but they're only paying you for that historical reporting. And so that's a big, big question that you have to ask yourself about any client that you work with. What are they paying for? Now, some clients only want to pay for historical reporting. That's fine. They're just looking for the cheapest possible labor to get a tax return done or to get their books up to date, and that's fine. But there are many, many other clients who would love to pay you for your help achieving the best possible results in the future. But the problem is you may not have offered them an engagement that's focused on that. So this first question is huge because it impacts every other element of your engagement. And that's why you start here with answering that question. Is the engagement focused on historical reporting or future results? Now, the next question you want to ask yourself is how much time and expertise is needed to deliver results that the client truly cares about? And here you want to think about, is the work that you're doing for this client for some reason so complex that it needs to be done by you personally, or can someone or something else be trained to do it? Meaning, can you have an existing staff member, or could you go out and hire a remote staff member, or is there a piece of technology that could be doing this work for you? As the owner of a firm, you should be focused on $1,000 an hour tasks, not $10 an hour tasks. And so what happens a lot of time in the crunch of being busy and in the crunch of tax season, you start doing the $10 an hour tasks instead of maintaining your focus on those $1,000 an hour tasks. So when it comes to what you're spending your time on and you're spending your expertise on with a specific client, ask yourself, is the work that I'm doing right now for this client for some reason, and it may be valid, so complex that it needs to be done by me personally, or can I start to figure out how to offload some of this $10 or $20 an hour work so I can focus on the $1,000 an hour work? Then we also want to think about what results or success levers in the client's life are you lending your expertise to really make a difference, to help them in a way that they feel good about paying their fee. Are you involved in helping them with business or personal financing opportunities, helping them getting a loan for their house or a loan for their investment property, or helping them figure out financing or stimulus for their business? Are you helping the client with restructuring how they pay or request invoices from their clients so that they can increase their cash flow? Are you teaching them how to add their spouse as an employee to help with some type of specific tax strategy? Are you helping them gain more control of their operations or their payroll management? These are just some examples, but we want to specifically ascertain how valuable is this unique assistance to the client, and is our fee based around providing that real value, not just delivering a compliance result that the client doesn't really care about. Now, the third question you want to ask yourself are, what are your hard costs to deliver value to this person? So on the technology side, we have things like accounting software and payroll and HR software, or any custom industry technology that we may need. We have a member that does a lot of work for real estate investment property, and so they have property management software that they have to have and use and maintain for a specific client. So there's types of specific technology that you may need for any client industry. We want to account for that. Then obviously we want to look at labor, your time and your energy, your staff's time and your staff's expertise. And if you have to bring in any remote or specialist help for this client, are we accounting for that labor as well? And then we want to look at any third-party services that are part of that engagement. So do you need help with a legal document preparation service? Do you need some type of financial analysis software to help you really provide value to that client? Or do you need help with investments or insurance, helping the client with something that you're not currently licensed to provide? And so when we look at the client, we want to look at the client holistically from technology, labor, and third-party services, not just what schedules are in their tax return or what's the billing rate on the accounting software, because a lot of times that's not going to wholly capture what that value is that we're providing to that client. And then the fourth question we want to ask is, what should your profit margin be so that you feel good about doing this work? As the owner of a firm, you shoulder all the risk, all the responsibility, and most of the stress. As you know, I don't have to tell you, it falls on you. And so my question is, if you're taking on those costs of owning the practice, are you also reaping the benefits? And you really should. And maybe you haven't thought about that in a long time, but that's something to ask yourself. If you really are taking on all the stress and responsibility and the risk of owning this practice, are you benefiting in any way? And your profit margin, that's where the revenue is that you're going to make, that's going to allow you to create those benefits by increasing your personal conversation and giving yourself those lifestyle perks that you deserve and implementing a workflow that gives you the time off that you want. So being able to have the technology you need, being able to have the staff in place so that you don't have to work 80 hours a week. Your profit margin is going to provide that revenue so that you can do all those things. So think about your profit margin for every client, because that's where you're compensated for creating value for everyone else. And you don't want to be in a position where you're creating value for everybody else, but you're not receiving any value when you're taking all the risk and the responsibility and you're taking on the stress. And so to summarize, if you align the right number of clients at the right price level, you can make life easier this year and you can avoid another excruciating tax season next year. But you need to take action now. We need to start working on this right now this year so that you can make that happen. So the first thing I want you to do is I want you to do a quick pricing audit on your firm and see what your current ARPC, or your average revenue per client, truly is. And that's a simple equation. It's the one number that we see that directly correlates to a firm being profitable or not. That's your average revenue per client, or ARPC. And to calculate it, you just take your total number of clients that you serve and divide that by your total annual revenue. That's going to give you your average revenue per client. And then I want you to ask yourself those 4 pricing questions about just 5-year clients. Don't get overwhelmed and try to do this for 100 or 1,000 people. Just pick 5 names out of your client roster and ask yourself those 4 questions that we just went through. This is going to help you identify how misaligned some of your client engagements currently are and give you that analysis of what you may or may not need to take action on to start fixing it. If you need help with improving your engagements with clients, or even just determining what a right price should be based on the value that you're providing, based on the types of clients that you're working with, our member pricing guides show you exactly how to calculate a price for any client. We have the tools and the templates already set up so you can plug and play and figure out your exact right price for the right service offering in seconds. And so you don't have to reinvent the wheel. You can just use what's already there. And so we'll make that available to you here on the next slide. So if you want to simplify your client engagements, if you want to increase your profits, if you want to implement changes without upsetting clients or staff, a SmartPath membership may be right for you, because we're going to give you access to the tools and the templates and the training that you need to do all that stuff. And to learn more, you can just go to our website, smartpath.co. We have 3 different membership levels, and you can see all the pricing and all the details and all that good stuff. So we hope that this training today was useful to give you that analysis to see if you need to update your pricing. And if you need some help, we'd love to see you over on our website at smartpath.co. To your success, look forward to speaking with you soon.